Well, how it growed. The enthusiastic global reception of the subsequent rounds of mortgage-backed securities created an updraft and a wider search for mortgages to put into the pipeline. Soon, U.S. mortgage brokers realized that with the new underwriting standards, all they needed was a warm body. And I can tell you a lot of other stories about, I've done research to find, how much of the housing that was built, for example, was never intended to be lived in. Anyway, the rest is history, and of course it is our future, unfortunately. The effects on Canada, well look, everybody knows this. The effects in Canada were not great. We didn't take a lot of toxic assets, some toxic asset on our balance sheet, few little mistakes at case, 30 odd billion or so. But generally speaking, we didn't have a big problem. No production of toxic asset because our underwriting standards were not changed and our MBS are sound as a result. Now, I found a real joke on the bank account and his balance website, because what they said was the reason why Canada didn't have any problems with toxic assets is why? Because most of the mortgages are done under the government framework. They obviously didn't look into the United States to see who was issuing them in the United States. 68%, as I say, of securitizations in the United States were done by those three organizations that I mentioned, Ginnie Mae, Freddie Mac, and Ginnie Mae, Fannie Mae, and Freddie Mac. So we were just lucky. That's the truth of the matter. We were just lucky because we didn't have the equivalent of that book that came out from the Federal Reserve. We didn't change our mortgage standards, ladies and gentlemen. Our bankers didn't have the benefit of instruction by Richard Cyron about how to let a mortgage. We're going to have major economic impacts, of course, because, as I said, 50 cents comes from the United States. We're going to get potential sideswipe from U.S. inflation or higher real interest rates. Now I want to turn to, so that's the short version of what happened. Very quickly, 10 U.S. policy musts. Proactively put underfunded banks into the FDIC has an accelerated intervention program. We should be liquidating banks in the U.S. that are underfunded, like right now. Abandon the so-called recovery program and cut taxes. Remember, stop the villain hunt, unless that's going to include the Congress, for reasons that I've already pointed out. Stop saving the auto sector and other failed producers. Use the money to cut taxes. Announce a firm resolve to avoid protectionist legislation. Ladies and gentlemen, we are looking down the barrel of a very bad situation potentially if that, remember what I said about what democracy is all about. Overhaul the government mortgage giants and get them out of social policy. Abandon the too big to fail attitude. Avoid the Japanese disease. This is what the Japanese did. And Mark, and I'm going to mention again in his fantastic presentation on market meltdown, shows what has been happening to the balance sheets of the central banks in all of these countries. And if you look at Japan, ladies and gentlemen, you can see the problem. Because, you see, once you take these things onto your balance sheet, how do you get rid of them? How's the Fed going to unwind all of this crap? Because what does it mean? What do they have to do? They have to intervene as the money supply starts to recover and as velocity starts to recover and as there starts to get inflationary pressure. They got to dump that stuff. And what do you think is going to happen in the Congress when the bank in such and such a place is going to get all of its stuff dumped on it and they can't manage it and all that? You can just imagine the politics around all of that. So they need to, right now, they need to say, you know what? They've already started to talk about too big to fail, fortunately, but they need to say, ladies and gentlemen, we got to avoid the Japanese disease, and we're going to, and that's what we're going to do. They need to take a firm resolve to stick with inflation targeting by agreement between the Congress and the Fed. As if they don't, the pressure that will come on, the Fed will come under, and because of all of the vagaries of economic analysis, it will be possible for them to justify conduct which is not in keeping with controlling inflation. And as I've pointed out to you, the great triumph of the time in which we live is that we have eradicated, basically, it's like eradicating malaria. We've eradicated big-time inflation from the world economy. We've eradicated expectations of inflation, and the thing that will eat away at our possibilities for recovery will be a sense that the Fed is going to allow their monetary policy to get away from them. The Fed must announce its lender of last resort policy, including eligible assets, and firmly adhere to it. I don't know whether you've been watching what's been going on lately about the New York Fed and crony capitalism crap that's going on there with the appointment of the new president and so on. If this stuff, this is again a corrosive thing. The Fed needs to right now take a position on its lender of last resort. So they're not going to save this one and let that one go. I mean, if they were going to let one, they picked the wrong one to save. They should have let Bear go and saved Lehman's, right? Or else we wouldn't have lost AIG if it weren't for their decision in that regard. But more to the point, they shouldn't be making those kind of decisions. They should have a policy that here is what we're going to do if you get in trouble. We're not going to bail you out, because if you say, well, we'll bail out this one, and we'll bail, you're creating a moral hazard. They start to say, well, we can get away with this crap. We can get away with it because the Fed, we'll have what used to be called Allen's put. They'll save us because we're too big to fail. So the U.S. has got to change that outlook, and there are a lot of people now starting to talk about this, including some very influential people. So I think that they're going to move in that direction. Finally, the federal government must retract its incursions into the underwriting standards applied to mortgages and other loans. This is absolutely... So, ladies and gentlemen, thank you for your attention, but do you have some questions?
A lot of people won't take time to see this presentation, to think clearly about these issues. In fact, for them, it's all about greed and Wall Street. And in fact, we're going to see a remake of Wall Street next year. What do you say to that analysis or that view on what caused this?
Well, Mark, I've been at this business now for about 40 years, and the one that comes up consistently from the left, as I mentioned at the beginning, if it isn't ordinary people having greed, it's aliens having greed. The thing that I've noticed in my analysis of both the neighborhood in which I live and looking back over time is that greed is more or less a constant. And in fact, its actual saving grace is its universality. Is that everybody is greedy about their own stuff. They're greedy about, first of all, their own families. They will put the interest of their own families, when push comes to shove, against everybody else. And isn't that great that we can rely on that people will put the interest of their family? This is not Adam Smith taught us in 1776 that this is not a bad thing, because it is not from benevolence. It's not from benevolence of the baker and the butcher and the who's the other guy? The brewer, that you expect your supper. Don't forget the brewer. That you expect your supper, but from their attention to their own interest. And that is why this magnificent market system that we have works. And so when people talk to me about greed, I tell them that story, that it's about harnessing special interest, the special interest that every person has in their own well-being. That's what the market does. And because it is a universal thing, greeds tend to balance each other off. And so greed, ladies and gentlemen, in my view, does not, what do we say then? We had a big breakout of greed in 2002? What, 2001 they weren't greedy, these guys in the banking industry? Ha! We all dealt with them in 2001. They were the same in 2001 as they were in 2002. So it wasn't an outbreak of greed that caused things to go south. It was because the structure in which they were operating didn't provide the right competitive pressure to make sure that one greed was balancing another greed off. And I've pointed out to you how those rules got changed. And how do we know that that's the right explanation? Because it didn't happen in Canada. That's how we know. We got these two economies side by side. What, Canadians weren't greedy? Is that what happened? So, north of the line, no greed. South of the line, greed. Oh, come on. So you got to be pretty stupid, really, to really believe that this was any explanation. I agree absolutely with what Mark says, that a lot of people believe this happens. And the difference between a system running on greed and self-interest And one that is operated under force and coercion is that in a system where markets are operating, you have this interface between people who have to persuade each other to trade and persuade each other to transfer their property. And if you have a system that's run by the government, then you don't have that. You have the government taking property and doing with it what political pressure tells them to do with it. That's what I'm saying. That's why we can vote.